internet blackout that largely cut off the country from the outside world. Secretary of State Marco Rubio posted the United States.
All right, 1 minute.
All right.
Ooh, nothing like cutting it close.
Yeah, bro. It's all right. We the kings of wing, dude.
Wait, say what? The what?
We the kings of wing. You know what I'm
Oh,
saying?
the Kings of Wing. Yes, yes, we are.
That's what my boss said, bro. Hey,
Dude, they dropped the Ninja Turtles panel on me like 20 minutes before it started, and I'm like, okay.
go. Donatello, you rock.
Yeah, dude. They were so cool though.
What's up, Gumbo Nation? Got a great show planned. Glad you'll be hanging out with us. Excited about today's show.
10 seconds before today's show.
There you go. And a pre-claimer, this will be the greatest show until next week's. What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority, and this is your home show where for 11 plus years we've been providing education and options on what is or will be your largest investment and most valuable asset, and that is your home. If you're new to the show, welcome to the Gumbo Nation. We think you're going to enjoy it. If you want to join the show, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. And you can also just check out Google Dwayne Stein, Google Mortgage Gumbo. You can find all our social media sites. Go subscribe over on YouTube. Type in Mortgage Gumbo. Become a subscriber over there. I am a lender. I lend money when it comes to your most valuable asset, your home. And enjoy doing that for sure. So on the show today is wait and see. Is that over? We'll discuss that when it comes to Rate Watch and everything that's going on with mortgage rates. I love it. I'm excited about it. It is a great thing. Rates are going lower, and a lot is going on. Trump is trying to do a lot of things to keep this going, so we're going to talk about that. We're going to talk about quantitative easing. Remember that? Remember when those rates got down to the 2.5s? Well, we're doing a little bit more of the same. That's not happening, folks. However, relief is on the way, and that is a great thing. And there's 2026. If this is the year, if your New Year's resolution is to buy a home, we're always here to get you prepped. That is for certain. Just want to thank you, Gumbo Nation. We talk about it all the time here that at Mortgage Gumbo, we are a lender, and got an email yesterday. We'll be recognized again because of you as one of the top lenders, not just in this area, but in the country, and not just tops, in the top 1% of all loan officers. So, and that's because of you. And so appreciate you being a listener, appreciate the referrals, appreciate the opportunity, and we do that because of you. So being top 1% is awesome, and I owe that all to you. So kudos there, claps, all that kind of fun stuff. So I don't know if you knew this, but yesterday was Quitter's Day, and found this out from my staff. And Dave, do you know what Quitters Day is yesterday? Do you?
I do not. Did all your staff quit?
No, no, no. Thank goodness. But what it is the second Friday of the new year is always known as Quitters Day because that's about when everybody's giving up on their New Year's resolution.
Oh yeah, all the people who go get by the gym memberships.
Yeah,
and then they're like, yeah, this is too much for me.
It's over. Yeah, and my sister, who also works with Christy, was like, "Hey, did you know what Quitters Day is?" I'm like, "Well, it better not mean that y'all quitting." And and she goes, "No," because she was ordering some pizza for the family, and one of the pizza places was like, "Hey, congratulations, it's Quitters Day, right?" So so who knew? You know what I mean?
That's why I wonder how busy they must get where it's everybody like, forget about it. Order some pizza.
Yeah, right. You know what? Enough's enough. Get extra cheese.
Forget that meal prep stuff.
Yeah, yeah. Get extra cheese. Yeah, right. I'm out of milk. I'm out of everything I bought at the initial grocery run. So you know what?
Let's get my bag lettuce is brown now.
Yeah, exactly. Yeah, my tomatoes all got mold on the bottom, the grapes and all that stuff. So, but Dave, before we get into what we have is an amazing show. Tell everybody what you got going on, man. You've got a busy weekend ahead of you, and
Lord,
I'm sure people know, but just kind of, it's a big deal going on in the city this weekend.
Yeah, so Fan Expo NOLA is going down at the Morial Convention Center. So if you're downtown and you see a bunch of weirdos dressed up in costumes, it's because Comic-Con's going on. So it's down at Hall I, and dude, it's freaking enormous, man. I mean, it is. They pulled out all the stops this year, and yours truly, I'm moderating a bunch of panels. I'm up on the main stage, Dwayne. I'm moving on up like the Jeffersons, bro.
Nice, bro.
So yesterday I did the Teenage Mutant Ninja Turtles panel, like the old school TURTLE
yeah,
power.
Yeah.
And so I'm up on stage with these guys, and they tell me about it 20 minutes beforehand. I'm like, okay, fake it till you make it. Let's go, baby.
Right.
And so yeah, but today, dude, I got Ethan Suplee, the big brother from My Name Is Earl, and
Okay.
God, he's been in so much stuff. And then tomorrow I got Dean Norris from Breaking Bad. Then I got up on the main stage, I've got like the Weasley twins from the Harry Potter movies. It's kind of crazy, man. So I'm gonna be doing that all weekend long, emceeing and moderating, and yeah, it's gonna be a long weekend, bro.
So do you have like a booth set up, or you just kind of being pulled all around because you're a big shot now?
So, well, you know, the funny part is normally every year I have a booth, and it's kind of like everybody comes and checks in and leaves their crap at my table.
Yeah, right.
But it got to be way too much, and so since I'm moving around so much, I was just like, let's forget about the table. So you got to catch me on the fly. So if you'll see me on the stage, I'll be rocking my cowboy hat as usual. So there's like 2 people in the entire city who wear them. So you got a 50-50 shot to find me.
That's awesome, bro. Well, good. Check it out, Gumbo Nation. Go out there. Make sure tell Dave hello. And
yeah, and I'll be posting stuff on my Instagram, D Squared on the air, and then on Twitter too, D Squared Radio.
Nice, man. There you go, bro. So go out, check them out. It's I mean, would you call this? And I don't want to insult anybody. Is this like a nerd fest, or I mean, what is this?
So you know, the funny part is, I 5-10 years ago, I'd have said yeah. But now it is so mainstream because they got everything, dude. I mean, they got wrestlers out there. They got you know, just dramatic actors and things like that. So it's not just like your hardcore comic book nerds that are like, you know, actually Batman in issue number 22. That those guys are there, but they are not prevalent. I mean, it's family oriented, dude. Like everybody's out there with their kids. There's Legos. So if you're a parent and you got like a 10 or 12-year-old or a teenager, bring some cash, bro. Bring some cash because they'll be like, Mom, I want this. It's a really good time though, man. It's really and it's laid back and family friendly. So it's win-win, bro.
That's awesome, brother. Gotta love it. Go out there, see our boy D Squared out there for sure. So, all right, let's get back into, because I'm excited about today's show, because finally, I think we've got some momentum, and finally, I think maybe some wait and see for all those procrastinators. And we talked about y'all last week. Is that over with? You know, and that is what we're going to be discussing today on the show. You know, that locked in effect theory. Is it time? I'm going to kind of give my opinions on, we've talked about that and how real it was. Well, now as the rates are falling, what does that mean? So we're going to kind of go over that. But yesterday we had the jobs report come out. BLS, right? We know what we do. We're still removing the L, the BS report. But jobs report, they were expecting 73,000 as an estimate, and it came back in at 50,000. And what's crazy is, and not for you who listen to Mortgage Gumbo and who are fans of the show and who understand the importance of getting true data but they've now revised October and November has been revised down by 76,000 jobs. And if you remember December, Powell didn't want to do it again because he said, we're not sure, we don't have enough data, blah, blah, blah. Well, down another 76,000 jobs, right? So that's why he didn't cut the Fed rate. Right? And what goes even deeper is because you start hearing, and we're going to get a new Fed chair, and we'll see what happens with all that stuff, right? And we've been telling you mortgage rates don't need the Fed, and this is proof of it. Mortgage rates don't need the Fed to cut rate. It's two different things. However, mortgage rates line up with inflation, and that's what the Fed has been trying to get right, although this regime has done a horrible job going back to Janet Yellen and all that stuff. But what's even deeper is what effects, what have we been talking about? The canary in the coal mine for years we've been talking about is unemployment. Not inflation, unemployment. Well, the BLS just revised, and these are the little things. These are the little things when I come on the show and we talk about the roller coaster. Right? We're at the top, and then it's starting to trickle down. And what flattens us out or makes us go right back up real quick? Well, when you get a report like this and see that last year there was 3 different revisions on the unemployment rate. So when they came out and said something in March, hey, employment rate's 4 point, and if you remember what we kept saying, if it gets to 4.2 or it gets to 4.3, well, now it's at 4.4 and 4.5, right? But what happened was 3 separate times last year, they'd come out with this report, and the unemployment report would be at 4.2. Well, now they've showed 3 different times last year where they had to revise that up. So that 4.2 would have been 4.3. Well, what do you think that would have done to, regardless of what the Fed, it might have helped the Fed with decisions, but what that would have done to the bond market is it would have helped things out, and it would have helped mortgage rates. Because once you finally got the right number or the number that nobody liked, and it hit that 4.4 number back in the end of July and August, just like the prior year, well, all of a sudden you saw the rates drop. And then kind of been riding that wave a little bit. But then they come out, and you got 76,000 jobs, this, that, and the other over. So this unemployment number itself has been a huge factor, as well as the amount of jobs. And we want folks to have jobs. That's what we want, but we want them being reported correctly. So remember, all they kept saying is the job market is strong. The job market is strong. Well, we're looking at inflation. Well, now, when you've got inflation's in check, and look, we're still waiting to see. I was surprised it didn't get announced yesterday on what the Supreme Court's going to do with these tariffs. But now with the jobs report, and you look at what's going on, and inflation is steady, maybe some of all these rate cuts are going to come as these revisions come. Because I think if these numbers start coming out and people are able, as we head into 2026, start feeling better about things, well, hey, maybe some of those quality job openings will become available. Right? Because now it's all about, hey, what's a quality job? And that's why you got to, when you're going through the drive-thrus and maybe it takes a little bit longer, you know what? I tip my cap to those folks because they're out working. They're out trying to make it happen. And that's where we've got to look at and see because, every business there's different levels of employment. And you've got to get to a point where you earn something. You can't be out of high school and doing like they're doing in California, and that's why all these businesses are shutting down. All the fast food chains are moving out, where you got to say, hey, they need they need to be fair wages and all this, and you're paying somebody $23 an hour I was a fry guy. I knocked down $3.35 an hour being a fry guy. A fry guy shouldn't be making $23 to $25 an hour. So we'll continue to watch that. But I think what we're seeing now is it's going to give that much more opportunity maybe to where we get a Fed cut, another rate cut as well, which will help with what? Those short-term rates, right? Those student loans, those type of things. All right, don't go anywhere. On the other side of the break, we got a great show planned. Hey, we're going to talk about is wait and see over. Rates are dropping. We're now over 1 full percent over where we were last year at this time. So what are you waiting for as affordability comes into play? And then what are some of the things that Trump is doing to make these rates lower? Quantitative easing. You might remember that. We'll discuss that on the other side and the rest of the show. Don't go anywhere. I'll find you. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio, 504-260-0995. That's right. We're celebrating low. Yes, we are. It's a little teaser when you go, hey, where are mortgage rates going? So we're celebrating low. So quantitative easing. If you go back and listen to the shows in 20 and 21, that's when the government was buying the treasury bonds, which then are, equivalent without getting into a big become mortgage-backed securities or match up with mortgage-backed securities, right? So we love we love election years, especially midterms, right? Because everybody's trying to maintain and jockeying for position. And this week on Thursday afternoon, gotta love it, Trump basically told the GSEs, and if you listen to the show, you know what a GSE is. It's a government service entity, right? And what is that? That's your Fannie Mae and your Freddie. Well, Trump and the FHFA, because the government still owns it, said, hey, you're going to get off of some of your liquidity here, and I need you to buy some mortgage-backed securities. Buy some of these long-term investment securities for us to the tune of $200 million. So that is a huge, huge win. Huge win, right? So, sorry, not million. Little Austin Powers. Billion. 200 billion. And so how does that impact mortgage rates, Dwayne? Hey, great question, Gumbo Nation. Great question. Well, where you're going to see this relief is maybe not on the 10-year Treasury, but you're going to see it in your spreads. And Gumbo Nation, y'all know about this. We've talked about this. Well, whenever we do Rate Watch, we kind of tell you what the mortgage spreads are. And a good or a great spread on mortgages, good is usually 2 to 2.25. Great is 1.75. So if you take the 10-year Treasury, like if you're driving and you hear somebody, man, I wonder what rates are today, and you listen to some financial show and they're like, hey, the 10-year Treasury's at 4%, just to use a round number. We'll add 1.75 to that, and that's where a 30-year fix should be. Well, the last few years, that's not even been close. So what happens there is if the spread's so wide, who loses out on that? Well, if the investor has to buy the money for more, nobody, contrary to belief, and without getting political here, every business's job is not supposed to be to open a door to go break even, because everybody deserves this, that, or the other. So what happens here is the investor is not able to give or help you benefit because there's not enough skin on the bone to give back. The reason why we saw 2.5% rates back in the day is the government was buying all these bonds. They were able to give that back. The spreads were so low. Now if they use this capital to buy longer-term bonds, well, mortgage rates are going to go down. And we saw this yesterday. The 10-year Treasury barely moved, yet mortgage rates went down. So, to reiterate, while that 10-year Treasury may not see, you're going to see mortgage rates come down because they have the backing. And when they're buying $200 billion, that's going to lessen the spread. So that is where you will win. Now, let's put this in scale. $200 billion. That's awesome. But back in 20 and 21, folks, 2.5% and 3% rates on coming back. Because in 20 and 21, they were buying $40 billion a month. Now, Powell did say, and it started in December, that they were going to quit selling the bonds and start buying some back as well at $20 billion. Folks, when you look at GDP and you look at all these things, 40% 40% is housing. You can't have an economy. Think about everything that runs off of folks buying a house. Paint, nails, steel, wood, shingles, mortgage gumbo is transactional, right? It's these transactions. So this $200 billion is going to make a huge impact, and relief should be coming. Now, will you still have external factors? Do you still have other things going on? Yeah. Right? These jobs and stuff like that, we want to see things starting to be positive. Like I mentioned earlier, the Supreme Court, like what decision is that, what impact is that going to have? If all of a sudden they say you got to give back the $800 trillion or whatever it is he took in, I mean, what do? You cut checks? So there's a lot going on here, but this is positive. They're trying to, and we mentioned a couple weeks ago when they were talking about 50-year mortgages, and they've come off of that, and we told you that probably wasn't going to happen. But the good news is now is they're putting things in place that should start opening things up. And again, is the wait and see over? So let's kind of talk about the spreads to give you an example. So let's get into our weekly segment we like to call Right Watch. Folks, listen to this. Last week was at 6.20. That was almost 1% lower, 90 basis points lower than the year before. We're now at 6.06. For a little bit yesterday, we were at 5.99. So at 6.06, you're basically at 5.99 on a 30-year. 15-year, 5.59. FHA, 5.70. Jumbo, 6.35. VA, 5.75. But the 10-year Treasury's at 4.171. So take your four, just to kind of put my theory in place for you, 4.171 plus 1.75 is 5.921. And we're at 6.06. Whereas last year at this time, we were at 80 basis points above. So our margin was at 250-something. In May, we were at 80. In September, after they did a rate cut, things started to shrink. It was at 50 basis points. So this is why I'm telling you, we don't need the Fed necessarily cutting the federal funds rate from what we wanted. Don't get me wrong. But we've got a lot of other factors that could help out with mortgage rates. And at the end of the day, they understand the housing market has to keep moving. There's got to be transactions. Because somebody buys a house, what do? Now, and I probably sent out over 24 emails last week of folks who wanted the 10 Commandments, but somebody buys a house, what do? They get new furniture. They do it now. Do it after. Don't go financing it during the process, but they get new furniture. They paint. They update different things. I'm going to put a new fence. I got to buy a lawnmower. I now got to cut grass. I need a weed eater. I'm going to plant a garden. Well, I got to buy gloves because I don't want dirt under my nails. So there's a lot of different factors that housing has so much pull on. And that's why it's exciting right now as these rates start to go down, and now this $200 billion, I think this is going to be something that's going to sort of, when we look back, go, okay, hey, it kick-started things. And it's not going to be, again, a free-for-all. but it's going to be something that kickstarted. Because I could tell you over the last couple weeks and even last week coming in, hey, 6.20, phones are ringing, applications are improving. So opportunities are presenting themselves. All right, on the other side of the break, we're going to talk about the locked-in theory, right? The locked-in effect. And it's been real for a long time. But is the mindset shifting? Going to kind of go over some of those facts and some data and stuff like that to kind of explain for y'all who are sitting on 3-4%, maybe some things are changing on why all of a sudden you go, you know what? Maybe I'm ready to make that move. We'll present that and more. Don't go anywhere. You're listening to send you any information or want to join the show, info@mortgagegumbo.com. I am a lender, and thanks to you, one of the top 1% lenders in the entire country. Thank you, Gumbo Nation. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995. We're celebrating low because that's where rates are going. How exciting, 2026. How are you doing with your New Year's resolutions? Did you know that the second Friday of the new year, is known as Quitter's Day because that's when everybody bails out. That's hilarious. Quitter's Day. Like, I was like, at first I thought it was like, hey, does everybody stop vaping or smoking or, you know what I'm saying? But no, that's when everybody has said, you know what, I'm done with this resolution stuff.
See, that's why I just don't even bother.
Yeah,
Green.
well, we talked about that. I mean, why, overachieve? Like 10 straight years of not having a resolution, so I'm keeping myself.
50 years of being me. I'm happy with me.
You're rolling. Congratulations there. So we have talked about ad nauseum the last couple years of what is called the locked-in effect. And for folks who have and got in 20 and 21 and got that low rate. But is it time to challenge that? Is the wait and see strategy over? Yeah, I like that. Yes. Is it time to change your narrative or your thinking from what rate am I giving up to maybe a more important question is, does my home still fit my life? Right? That home you bought in 20 and 21 when you got 3%, 4%, 4.5%, does that still fit your life? Maybe you didn't have kids. Maybe you weren't married. Now maybe you're married. Maybe you bought that house and you're divorcing. Doing way too many of those right now. Maybe you had a child, no children. Now you added a child or two. So when people were buying back in between 20 and 22 and those rates were locked in, look, it was powerful. And that locked-in effect was real. But is the market evolving for some of you homeowners where you go, hey, I'm willing to consider making a move? The fact is, are you coming to reality that the days of 3% are never coming back? Maybe mortgage rates are stabilizing. Inventory starting to improve. Keep in mind, real estate's local. But do you know more folks now have a rate over 6% than do under 3%? So it's that what's going to trigger it, right? And is it growing families? Like I mentioned, is it growing families that are, running out of space? Is it retirees looking to maybe simplify, downsize, upsize? Blended households. Hey, maybe now having to go back to work, back to the office. So many of these decisions were put on hold, right? Because I'm not touching that. We didn't know. We didn't like where things were going. But what I see in the conversations I'm now having with buyers, and especially those who are homeowners, is the quality of life is starting to take precedent. It's starting to be the priority. Not being jammed up in a house. Or now maybe, hey, you know what? It was great getting 2.5% or 3%, but I don't need this much house. Because let's face it, so many. What was the biggest hesitation over the last couple years is not selling. Well, you want to make your money, so I don't. But more so than not selling, it was, well, buying the next home. If I give up this rate, what am I getting at this next rate? Well, as inventory starts to improve, as rates start to lessen, everybody is starting. The elephant in the room is always, what's my rate? Because I've yet to meet somebody who, when rates are high, they want lower, and when rates are low, they want even lower. So that hesitation now is there that person that's got where rates were more than double what you have? Well, now they're not. Now it's coming back into play. So that wait and see, wait indefinitely? Am I sitting here indefinitely? But I think what's happening is you're getting smarter, right? And is a move going to fit your lifestyle? Is it strategic? Does it make sense? And a lot of folks are now, hey, I got 7.3, I got 7.5, I got 7.75. Well, now we're looking at these and having conversations about, is a refinance right for you? This week, so many people said, Dwayne, I can't thank you enough. I know it was a little longer. We married the house and dated a rate. I know it took a little longer. I know you don't control that. But, hey, now that money, when you had me only put down 5%, I now want to use that money to put down, and we're getting people into fives. And we're saving them $400, $500, $600. Some people were saving $250 just by lowering the rate without putting any money down. So let's have that conversation by going to mortgagegumbo.com or snapsendandsave.com. But one of the biggest players in this, too, for all you homeowners is this. You have wealth, and that wealth is known as equity. And if you've bought in that 20, 21, 22, and you've got that 3.5% rate, you've got equity. And now is it time to figure out how we're going to take advantage of that? And look, real estate is local, right? One area of one parish or one county may be doing better than the other. It's all about locality. And like I tell folks, look out your window, that's your market. But what these rates, number one, stabilizing, people feeling better about things, and even dropping now, it's allowing more affordability. We mentioned it last week. You can now, just because of the rates, you can afford the same payment, you get $25,000 to $30,000 more in affordability and more house. That's amazing. That is an amazing thing. So those are the things, Gumbo Nation, when we're talking about this, is that wait and see strategy over? I'm not here to tell you, but what I can tell you is this. A lot of folks are having conversations. And a lot of folks are going, hey, let's talk about, and by the way, yes, at Mortgage Gumbo, we can help you list your house. Yes. Not only do we lend, but we can help you list your house. So, hey, should I list my house? If I sell my house, I get this. Or are we still looking to keep it as an investment property? Because, Gumbo Nation, here's what I want to tell you, especially my newer listeners, my folks that's been with me forever, who's helped me be in the top 1% of all lenders in the country. Y'all know this. But as rates fall, please understand home prices are not going to follow that. What you will see come March, come April, you're going to see an influx of inventory because you know what's going to come back on the market? All these delistings we've been talking about. All these people that pulled their house off the market because they wasn't getting what they wanted. Well, now it's the perfect storm for that homeowner because now they'll be able to put it back on the market as spring's approaching. The rates are lower. So if they're willing to take it off the market, you think they're going to try and fetch less money now? No. So have yourself, be ready for this. Lots of applications over the last week or so because people want to try and attack beforehand and then take advantage of the market going up and take advantage of that equity. So let's have that conversation. Is wait and see over? Or are you still part of the locked-in effect? Let's see. Let's have that discussion. Just go to mortgagegumbo.com. Is refinancing right for you? Mortgagegumbo.com or snapsendandsave.com. It's a 10-minute conversation at most. You know, did some of you do the buy downs and those are expiring? And you go, wow, okay, that 1% or that 2% buy down, hey, that payment's, I know I qualified for it, but that's a little bit different. Let's have a chat about that. All right, don't go on anywhere on the other side of the break. Got a great question here. What are your thoughts on Trump banning large investors? I'll answer that and more. Rates are low, low, low. Let's have that conversation. Y'all blowing me up, and I love it. Keep going to mortgagegumbo.com. We got somebody there. Just give me your name, phone number, and we'll reach out and chat with you personally on what your wants and needs are when it comes to your home loan needs. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995. We're celebrating falling rates. 30-year fixed. Now it's 6.06. Let's just call it 6. Heck, let's call it 5.99. So I got a great question here. Dwayne, what's your opinion on Trump banning large investors? Listen, we've talked about this quite a bit. I'm all for this. And I get these questions all the time, this house is in foreclosure, so I'm going to go in and I'm going to make a lowball offer. And I've tried to explain to folks, you got to understand, by the time you see a house, this isn't like when we grew up and you went by Little Johnny's and there was a big boarded up windows or a big pink sticker saying foreclosed. And, for me, who's old enough, we didn't have cell phones, so, people had to have house phones, so I never talked to Little Johnny again, especially if he moved to a different school district or state or something like that. Well, now, when homes are in bad shape or are getting foreclosed on, before they ever hit the market, now it just has a for sale sign. But before that, it's, hey, do these large investors like Blackstone and Apollo, these big hedge funds, do they want them? No, they don't want them. Okay, well, then it goes to that realtor or that brokerage that has the relationship with the investor. Do you want them? Do anybody you know wants it? Any of your investors? Then it trickles down. So by the time it gets down and you get the for sale sign, dude, that underwear has been turned inside out and reworn 3 or 4 times. So there's no deals. And the other reason there's no deals is why? What we talked about. Wealth, equity. Most people aren't upside down. They've got equity in their home. So banning these large investors or making it harder, I'm all for it. Now, you got to remember, when poop hit the fan, these were folks who were buying a lot of houses. But in my opinion, they have changed markets. I mean, there's areas in the middle of the country where they own pretty much blocks and cities. And there's 140-something million homes. Well, single-family homes is a little more than half of that, like 80 million. And those are the ones there that I'm looking at. Because if these become available and you add this to inventory, well, number one, it's going to be more inventory, but maybe it's going to ease a little bit of the pricing pressure as well. Because when you look at it as a percentage, 14 million homes are owned by institutions. So it's not a huge percentage from a percentage standpoint, but 14 million homes. And what you got to look at is, I break it down even more because owner-occupied is about 85 million homes, or 60%. Renters is 45 million. Homes that are seasonal or vacants, 10%. I'm not really counting those. But so now we start looking at rentals. Well, 45 million, that's 14 million of that. That's a lot. So these are the things that I love that this administration is throwing out there and looking at because they understand the importance of home ownership. They understand the importance of the housing market. And look, I'm a guy who's bought properties, owned rentals, stuff like that. But we can't have these institutions buying up thousands at a time. Look, I can remember in a day we couldn't finance somebody if they had more than 4 rental properties. Then it went to 10. Now we have unlimited. So we'll see what comes out of this. But again, I like it. I like that it's being discussed. And who's going to win? You, the consumer. because that's going to provide more inventory. That's going to provide more opportunity. It may help with some of that pricing pressure and some of that affordability as well. Hey, and we thank those institutions. Hey, when poop was hitting the fan in 2009 and all that stuff, y'all were there. But like anything, right, Gumbo Nation, it's a what have you done for me lately business. And you want to be a homeowner and you want more options. Well, banning this is going to do just that.
1 minute.
So keep that in mind. Listen, to home away from the show, rates are falling. If you're already a homeowner, let's have a discussion. Is it time to refinance? Are you considering home ownership? Your buying power is up by $25,000, $30,000, $50,000, depending on the loan program right now compared to last year.
30.
We will find you and get you qualified for a home. We just need to have that conversation. The best way to do that is go to mortgagegumbo.com. Stay dry out there, Gumbo Nation. Go check out Dave at Comic-Con, Building I. Till next week, Gumbo Nation, keep stirring the pot.